Welcome everyone to your Hamby webinar for March. And we are here today with Kelly Dunbar, the lone leprechaun. And here we are celebrating St. Patty's Day. I love your little hat, Kelly. That is so cute. And like Dave mentioned, you are going to be our lucky charm and share some great information with us. Thank you, Dave. As you all know, Dave Ige is our Hamby president this year. So thanks for your awesome words and your recognition of the sponsors. It is the sponsors that definitely keep us going here at Hamby. So it looks like we've got about 13 attendees already scheduled. So let's give it just a couple of minutes for a couple more people to join. And then from there, we can get started. Kelly, so what are your plans for St. Patty's Day?
You know, honestly, I'm gonna stay home with my kids and try and trap leprechauns. That's the that's the big plan. No big plans, but we always celebrate. It's always festive, that's for sure.
Awesome. And then you said you had mentioned that you've got some giveaways today. So let's talk a little bit about those.
I do have some giveaways at the end, so I'll just ask some questions on some information that was presented, and whoever replies in the chat, I've got 3 small giveaways today, and my intention is to give them to the winners at the Lender Roundtable at Dave & Buster's in April. So I will see all of you guys there.
Awesome. Okay, so are we ready to get started? Are we all teed up?
I can start sharing my screen.
Yes, so go ahead and start sharing your screen. So go ahead, Kelly, Freedom Mortgage, take it away.
All right. All right, guys, so I just wanted to do a short presentation today about Freedom Mortgage, how we can help you close your loans. And Dave had the great idea of sharing war stories of recent deals that were challenging, but we found ways to make them happen. So I decided to throw it into a bit of a St. Patrick's Day theme since it's right around the corner, and wishing you all a top of the morning, and let's go ahead and get started. So I am Kelly Dunbar. I'm the account executive, AKA Lone Leprechaun for Freedom Mortgage. I've been with Freedom for almost 7 years now, and in the mortgage industry much, much longer, way too long to admit. But if you have any questions anytime, feel free to reach out to me. And I thought this little quote was great for about today, because luck is what happens when preparation meets opportunity, right? So it's not just luck, it's also about being prepared and having the information. So that's what we're doing here today. So why partner with Freedom Mortgage? Well, here's just a quick overview. Freedom is the #1 VA and FHA lender in the nation. We have very aggressive pricing and almost no overlays. You know, there's some minimal things here and there, but they are very minor indeed. You can lock online until midnight Hawaiian Standard Time. We order and pay for condo docs, which is a nice perk, especially, you know, in a refi, that's always a great perk. In a purchase, it's something you can, you know, tell your buyer's agent that they can offer to pay for the condo docs to the sellers. Maybe gives them a little edge, something to negotiate at the table. You can communicate directly with your underwriters, closers, whoever's working on your loan is available to you at all times by phone, email, whatever that works best for you. VA jumbos is a good niche for us. We have no max loan amount. We'll chat a little bit more about that in a couple minutes. We have no minimum FICO. We have no max LTV. So again, we just have no overlays there. So we do a lot of those more challenging, especially larger VA loans. We do manual underwrites for both FHA and VA. Turn times are very quick right now. We offer a free 7-day extension on all purchases. That free 7-day extension is available on refis also if the current market is the same or better as when you locked. For purchases, it makes no difference what the market's at. You just get a free 7 days regardless, and a knowledgeable AE. And you know, we talk a lot about FHA and VA. We are the largest in the nation, but we are a strong priced conventional lender as well, especially recently. I think I looked recently, we're really strong. So that will come, that'll ebb and flow a bit more just based on volume, but we do have a good team there, and don't hesitate with those loans either. Just for those of you that I haven't mentioned this too, we are broker focused the last several years. We do make sure that your information goes out on every mortgage statement that goes to your borrowers. So those loans are suppressed. The rest of the retail and call center can't see wholesale loans. They're in a whole different division, and it has your information. Those are your clients, and we don't want to direct those people back to you. All right, let's talk shenanigans, or like Dave likes to call them, war stories. Kind of what I wanted to focus on today were some overall themes and then give some examples of those. So, things where I feel like we struggle the most right now. And, it seems like all those vanilla loans are gone. All the loans we work on right now are a little bit trickier and have some intricacies. And so where we run into the most of our unusual properties, challenging income, and then just various, where are our flexibilities in policies? What constitutes make sense underwriting, and is it possible? And the short answer is yes. So let's talk first about properties. One property we recently did, it was actually in Texas. I didn't do this one. It was a cohort of mine on the mainland, but it was in Texas, and this property had 9 parcels. And we were able to do a $4 million jumbo VA loan on that loan. I think it was something like 256 acres or something crazy. But actually I had one of these come up on island on Oahu here too, where it was a 3 parcel property. And actually, because the precedent was set at the 9 parcel property, I was able to help with a 3 parcel property. And ultimately, the way we're able to make that happen is if we have one title report and we are lending, and that can run across that will mention all of those parcels, that is an option. So that was something I thought initially, no way we can do that. We have to have like comps. We had to have comps for the size in order to give value to the total land. If there is value being given to it. But something to keep in mind. So when those weird properties pop up, it's certainly worth a call. That one in Texas that was 9 parcels and 250 acres, it was $4 million. It was 100% financing. And I think that DTI was in the 60s. So it's not just because it was such a perfect loan that we made an exception. That wasn't the easiest loan to do, and we were able to find a way to make it work. We do a lot of Zone 2 for both VAA and Freddie Mac on Big Island, and water catchments and cesspools across the islands. With FHA, those can be a little trickier, but I actually just closed one. FHA looks at those a little more strictly than other agencies, but like I said, we were just able to get one done. So if you run into those issues where you've got quirky properties, let me know, and a lot of times we're able to make those work. So probably where we see most of our hurdles right now is in tricky income, right? I want to tell you about a loan I closed recently where the borrower was self-employed. He had his business license for 5 years. But the first year he actually filed his business returns of any kind, business income, was in 2021. And we were able to close that loan. Obviously, we know this was actually a couple months ago, so 2022 was not filed yet. So we were able to close that loan. Now it made sense. And this is where I talk about make sense underwriting. The borrower had his license for 5 years, but hadn't gone out until he had maintaining his W-2 job in the same line of work, until he was able to make enough money being self-employed. He was able to pick up a large account that gave him the opportunity to quit his W-2 job, but he didn't have the full 2 years of being self-employed. So it was only about maybe a little over 18 months. What we did do is we got audited financials, audited P&L. Those are expensive, we do know that, but in his case, it made sense. So with those audited financials and that 1 year filed self-employed income, we were able to get that done. And let me tell you, that DTI, I had it written down here. Let me see real quick. That DTI was 57%. It was 100% loan to value. It was obviously VA. And if I recall, it was over, I'm sure it was over $1 million. So again, it's not just because it's a cherry loan that we're making those exceptions. Overall, it made sense and we were able to do it. As far as DTI, I'll mention we follow AUS findings. We do not have overlays for DTI. If you have an approval with 72% DTI, we're good to go. We will ask for some compensating factors in that, some increased residual income, some reserves. We want to make sure that we're not putting the veteran in a bad position, but we're going to follow those findings. We don't have an overlay there. Loan size, I mentioned, we don't have a max loan amount. this one wasn't mine, but again, we recently closed a $6.2 million purchase. The DTI on that one was 64%. It was 100% loan to value. And on that one, you know, what was really tricky? We obviously had a higher DTI there at 64. And on that one, we were able to approve a brand new IRA distribution of $25,000 a month to make the DTI work, to close that 100% $6.2 million deal. So that one, we had great credit, we had good reserves, we had good residual income, and overall the loan made sense. So we're looking at these loans. I'll mention to you too, we have a new credit director. We stole him from Rocket, and he's great. I'll tell you, he is let's find a way to make it happen guy, and he's running our credit division, and he has been such an asset. And I find that we are doing so many more make sense loans now with him at the helm. So it has been refreshing. It's lovely, especially in this market where things aren't as, you know, vanilla as they used to be. We are doing a lot of joint loans, including non-occupant co-borrowers on VA loans, and we're seeing that more and more. You know, the caveat to that is you want to make sure that the veteran, qualifies for their portion of the payment plus their, you know, their DTI worked with their normal debts and income with that portion of the payment. But I have seen a couple instances where we weren't able to make it work with the veteran alone, or we've added a non-occupant co-borrower, we've done it joint. Keep in mind those, you know, because it's a joint loan, it's going to go to VA. So it's going to take a little longer, but it helps get the borrower into that property, which is really, you know, that's the end game, you know. As far as, you know, policy and make sense extensions, oops, I don't know if you can see my screen, I didn't mean to do that. There's a couple of things. I will mention one other war story and a couple perks, which is future income. I had a deal recently where we had a doctor moving to the mainland. So he was moving his practice. It wasn't not a transfer, but he had a new job offer. We had an offer letter, and he was moving in 90 days. He was finishing some up, wrapping some up on the mainland, then moving to, he was actually moving to Maui, and he had a new job lined up there. We are able to use the offer letter, which included the start date, the salary, all contingencies were cleared. But usually when we do that, part of that policy to use future income is to have enough reserves to cover the amount of debt there would be for those. In this case, it was starting in 90 days, for those 390, so the 90-day period. So any PITI mortgage payment, including any monthly debts. In his instance, it came to $36,000 that he needed in reserves to cover for a 3-month reserve period for those debts. He had $24,000. We were able to get that approved because it made sense. He wasn't not going to work for the next 90 days. He was still working and maintaining his income at his job that he was leaving on the mainland before starting here on island. And because it made sense, listen, if there was a gap where he truly wasn't going to receive income, then maybe we'd be more concerned and we'd need those reserves. But we were able to get an exception to use lower reserves because he still had his income coming in. So it made a lot of sense. I've also had exceptions where we've been able to go to 91, 92, 93 days for that future income in order to close our escrow on time. There's a little flexibility there. We can't go too much farther past that, but we do have some flexibility. Job gaps, I am now able to really see and look into those types of opportunities with FHA. So if you have someone where you've got a borrower with a job gap that seems like it's insurmountable, give me a call. We can look at some FHA options for that. And then there's, you know, bad credit history. I have an example where parents had co-signed with their son for a car loan and he made the late payments. And because of that, it affected their credit. Their credit score was in the high 500s. And the recent lates were precluding them from getting approved for manual underwriting. We were able to document that that was the son's car loan, that he had always made the payments, that he missed payments, and then he caught it back up. And we were able to ignore those lates and continue on and help those parents with a VA cash out loan. So just a couple stories about how we can overcome what may seem like insurmountable issues, and we can find the end of the rainbow. So that leads me to the next question. Are we at the end of the rainbow? Not quite yet, because I made one other promise when you signed up for this webinar, which was a reduced VA funding fee. Well, that was kind of part of my shenanigans because it's not just for attending. The VA is reducing their funding fee across the board starting April 7th, which is great news. For the most part, it's being reduced by about 0.15%, with the exception of the subsequent use fee on purchase and cash out when you're over 95%, and that's going down by 0.3. So that's just good news all around. It's everybody's lucky day anytime we see decreased fees, like we saw recently with FHA and now with VA. Always, always welcome news. Now it is time to win prizes. I'm not sure the best way to do this. I was just going to ask a couple questions, and if you wanted to answer in the chat, I do have 3 prizes today, highly covetable prizes. So the first question I was going to ask is, do we give free lock extensions? And if so, how many days? I don't know if I'm going to be able to see the chat. I'm not sure if this is going to work. I'll wait for a second. Well, let me show you what you could potentially win here.
Okay, I'm going to join you. So you have an answer in the chat, Kelly, and it is from Jay Hall, and his answer was yes.
Perfect. Winner. Jay, you win a box of Lucky Charms.
He's typing Jay. Jay, for
Good
the
job,
team
Jay.
and for the audience, can you remind us how many days free that Kelly and her team at Freedom will give us in lock extensions? He says that's his favorite cereal.
Good work, Dave. Yes. 7 days.
Yes,
The next
Dave, you're right.
yeah.
7 days. Thanks for the tip, Dave.
Was a hint.
Next one was, how late can you lock online?
Ooh, that's a good one. Jay, again, in the chat, first on the draw, midnight, he says.
Yes. And I want to mention one thing on that. If for some reason you're online and you're on late, you realize you need to go lock that loan and you're having trouble for some reason, so long as you have a loan number, you can email the lock desk and or me, or ideally both, with your request. We will price protect that for you. We will honor your timestamp on your email. So if you have any trouble technology-wise, shoot over that email. We'll still protect your lock.
Awesome.
And
Well,
the
that's
winner
awesome.
for that question is a 6-pack of Guinness.
Wow, Jay, you are going to be living life large.
All
I don't know if that
right.
tastes good with Lucky Charms.
Like, yes.
Last question, and for the best prize of the day, does VA allow non-occupant co-borrowers on their joint loans?
Ooh. Rebecca Markles came in first with yes.
Well, Becky, you will be thrilled to find your prize, a rubber chicken.
That is so awesome. Right on, says Rebecca. All right, you guys, that was some great prizes. I love it, Kelly. I learned a lot during this presentation. I mean, I can't believe it in this current market that that you are giving free extensions. That's pretty much unheard of when it comes to wholesale lenders. In fact, most of them now, even if you need 1 minute, 1 day, right, there's a cost to that. Tell us, so you talked about your VA loans and you talked about April 7 being an amazing day for us with closings happening after April 7 with reduced funding fee. How is Freedom Mortgage working on that right now for prospective loans coming forward, issuing of the case numbers, all of that stuff? Can you tell us a little bit about how to get that discount with you?
Absolutely. You know, I will say that VA is great in many, many ways. I think we can all agree with that. But one of the great things they do is when they make a policy change, especially something like this, they base it based on, VA bases most of their guidelines based on closing date. And for closing date, what that definition is for VA is the date the loan signs. So any loan that signs loan documents on April 7th or later will close with those reduced funding fees, regardless of when it started. You could have something that's been sitting in the pipeline for 6 months. If it signs April 7th or later, you will get that reduced funding fee. It's already implemented into our system, and I'm assuming most wholesale lenders. VA makes it nice and easy when they make updates fees on us lenders, luckily. So it's easy to implement. There usually aren't any hiccups in that sense. And so when I said you get your next loan with the VA with your reduced funding fee, the next one you close will probably be on or after April 7th at this point. So, and you know, if you're not in a holding pattern and you do have a VA loan and they can wait till April 7th, it's a nice little savings. It may not be worth it to delay a closing on a purchase, but you know, if it's close, something to keep in mind.
Yeah, so what about disclosures? What about those brokers that are competing against another lender and the other lender is claiming or showing disclosures with that reduced fee? Can they come to you and say, hey, I need to demonstrate this? It's not enough to just verbally relay it?
You know, that's a great question, Judy. I haven't run into that, but I'm going to say yes. It's already in our system. We would place a condition on the loan that it cannot sign docs until April 7th. It's disclosed that way, but we would have to go in and you have to request it from us. We have to manually go in and do it, but we should be able to do that, no problem.
Awesome, awesome. And then
I got a question for Kelly. When you're done.
Just as a reminder out there to all attendees, the chat is open, the questions are open. Please type in your questions for Kelly. Go ahead, Dave.
Kelly, can you go back to your first screen? It showed all the benefits with Freedom Mortgage. One of them that I guess caught my eye was that you guys will pay for condo docs. Can you go back to that screen?
What?
I'm glad you mentioned that. We do. We will pay for our condo docs on any condo transaction. And you know, what I didn't mention there, it's so weird when you talk without any feedback. You don't know if you talk faster, slower. People are tuning out. Who knows? But what I want to mention too about condo docs is what we're seeing more and more of are the FHA single unit approvals. And this is an interesting tidbit, but the state of Hawaii has been the lowest producer per capita in FHA loans in the nation for several years in a row now. And my theory on that is that generally speaking, your FHA borrower is your lower purchase price borrower. And we all know the lower purchase prices, it's almost exclusively condos, at least here on Oahu. And so in which case there are very, very few condo projects that are FHA approved. So for many years, I just think we just didn't do much FHA for that reason. Well, the single unit approval, or FHA reintroducing that, we used to do it years ago, it's called a spot approval. Reintroducing that has changed, and I am seeing more and more FHA production on island, which is fantastic. Because those single unit approvals, which again, we will pay for the condo docs, and we handle, you fill out a form. There's a couple questions you're basically going to ask either your buyer's or your seller's agent for, like it's year built and something else I can't remember off the top of my head. We send it to FHA, we get that single unit approval for you, we pay for the condo docs from the HOA and whatnot. So that, again, we pay for the docs on every single transaction, but I did want to mention when we're talking about condo docs, just wanted to bring up that FHA single unit approval. If anybody has any questions on those, you know, ask here, give me a call, shoot me an email offline, I'm more than happy to help.
And that's a big thing right there, paying for the condo docs. You know, I know a lot of times we get into a transaction and then we forget, oh, we got to have somebody get those condo docs, and then we got to come up and who's going to pay for those things, you know? And for Freedom to step up and do that, that puts at ease for basically the listing agent as well as the selling agent and our buyer, you know, and us. So
exactly.
I think
once that loan is
something great.
Once a loan is submitted and identified as a condo, which is usually within 24 hours of the loan being submitted to us, our condo desk will reach out to you directly and say, hey, on this loan, it's a condo. Would you like for us to order condo docs, or do you already have them? So if you already have them, no worries, just shoot them on over to us. But we will reach out to you within 24 hours of submission, asking you if you would like for us to order those for you.
That's great. Let me ask you, do you have a list of the condos that are approved here for FHA here in Hawaii? Do we have something like that?
I do and I don't. I have a database I can reference. I don't have a list of approved. I would have to go in one by one and search. I don't have a way of pulling up approved in Hawaii. I've actually tried to do that before because it seems like a great idea to have on hand. So if you have a question on a project, I can look it up. I don't have a way of producing and publishing a list of approved condos.
Okay, great. Great. Well, great benefit there. That one caught my eye on that first screen there. And manual underwrite. So you need to have something like that if you're going to be somewhat of a common sense underwriting company. You know,
Right.
if you're straight, DU or what, or accept or eligible, then you could be out of it if you can't finagle that particular system to get you an eligible. So that's great to know. That was a great slide right there. And
Oh, thank you.
had all the information that Jay Hall got the
That's right. Jay paid attention.
answers from.
So I also really love this side, Kelly. And the next thing that caught my eye is no minimum FICO, because obviously that is huge, right? Along with no max loan amount. But what about for no minimum FICO? So is there a rate add-on for that, fee add-on?
So, and the no minimum FICO, I was speaking specifically to VA jumbos, and I should say, I guess there is an overall program of 580 as the minimum FICO. But generally speaking, if you're in that range, you're not buying a VA jumbo. That's probably an assumption, but there's no minimum FICO for the loan amount, where a lot of times if you go over $1 million, you're going to say you'll see a restriction for a minimum of a 660 FICO or a 680 FICO, and we don't have that across any of our products other than the bare minimum FICO of 580. As for pricing adjusters, there are adjusters based on FICO score. We actually tend to be really aggressive. Where we tend to be the most aggressive, interestingly, is product or VA and FHA under 660 and then over 720. I don't know why we go for the opposite ends of those FICO ranges, but that's generally speaking where we tend to be most aggressive in pricing.
Awesome. Now, so we talked about the reduction in the VA funding fee, but FHA, which Freedom does very well, is also going through some reform. Why don't you tell them a little bit about some of the, mortgage insurance changes that are happening with FHA coming up?
Absolutely, and it's a really good point, because previously with before both the upfront funding fee was reduced, as well as the monthly mortgage insurance premium was reduced, and it varies based on your LTV and your loan amount. So I can't tell you straight this is the monthly mortgage, but it was a significant reduction on both. And due to that, FHA comes back into play again, where if you've got, normally if you had a 95% purchase, probably your best bet was going to be, if you had a good credit borrower, would be on 95% with PMI. With the reduction in the monthly MI for FHA, it makes FHA back to be a contender, because generally speaking, your FHA rate is going to be lower. Now your monthly mortgage insurance is more in line with conventional monthly mortgage insurance, if not lower. So I just actually flipped one recently that was conventional, that made more sense to take FHA, and that's rare, right? If they qualify for both, generally speaking, your conventional is going to have better financing terms. And in this case, because of the reduced funding fee, well, upfront mortgage insurance premium, sorry, I don't want to confuse VA and FHA here, and the reduced monthly mortgage insurance on FHA, it actually made more sense to go FHA, which was a really good win for the borrower.
Absolutely. I agree with you. Even in my own business, I have been pricing out a bunch of FHA loans. Yeah. Whereas before, like you mentioned, unless they had a 640 or something like that, I wasn't even looking at FHA, because I could probably get a better structure when I was looking at conventional. But with this new monthly MI, it really reduces that mortgage insurance. And what I've found really powerful for FHA as well right now, the loan limit, it can be a little challenging for Honolulu County, but it is blowing the doors off of the business and the outer islands, especially the Big Island, because everything is about 800, 700,000. So it fits right into that FHA model. And a lot of the borrowers are working with, lighter credit scores. So they may have major hits when we're trying to go conventional, which is really helpful.
Well, I'll keep in mind, I don't know off the top of my head and I should, but the FHA loan limit is lower on Big Island. Because the FHA, the way they calculate their limits, it's 115% of the average loan size. Historically, Big Island has had lower FHA loan limits. It does again this year. I wish I knew it off the top of my head. I can certainly follow up with those numbers for you guys.
Yeah, well, you can definitely send it out to the attendees afterwards. And share that information with them. So another topic when we talk about VA loans is non-permitted square footage. And of course, the last number of years, the VA has come up with a lot of circulars surrounding how to mitigate non-permitted square footage or possibly light deferred maintenance. Can you talk a little bit about getting those loans through with Freedom?
I'll be honest with you, because of those circulars, it hardly even comes up. We're just so comfortable with it. Unless the appraisal comes back subject to, I haven't seen us in years ask us or even question deferred maintenance and or unpermitted square footage. We are very comfortable with island properties. We know what's standard for the market. We understand, that we have different things that are affected simply because of our weather, and termites and whatnot. And we'll see that I have not seen us condition or anything to do with those other than if it's subject to by the appraiser. It's been years. Honestly, it's probably been over 4 or 5 years.
Awesome. Well, that is so very good to know, because I know that with traditional lenders that are not as comfortable with the island properties, as you just mentioned, brokers are having to enter in letters from a contractor saying that it is, workmanship-like manner, and LOEs from the veteran that they understand that there's non-permitted square footage and it may affect value in the future. So that, I guess that would fall kind of like what you're saying underneath your no overlay situation here at Freedom. And the other thing that I really enjoyed from your presentation was that you're closing loans well over 50% DTI. Most lenders are giving you a hard cutoff at 50% DTI. Talk a little bit more about that, Kelly.
Yeah, and that even extends into the VA jumbos. I mean, which makes sense, obviously. Most of my jumbos, over 2 million, over 3 million, the DTIs are in the high 50s, 60s. I have one right now. I think it's a 1.5 that will be in the 70s, 70% DTI when we close it. So, that's the nice part about being kind of a make sense underwriter and not having an overlay for DTI, that we can accept those AUS findings if you have an approved eligible. And so long as it makes sense, the one thing that the VA asks of us as brokers considered the lender, we're considered the sponsor, but as the bank, maybe I should say, is that we are looking out for the best interests of the veteran. So when we see those higher FICOs, we want to point out compensating factors, which could be reserves, it could be minimal payment shock, it could be an additional source of income that we can't use for qualifying, but we know is there to help offset. And when we can show those compensating factors, and we're putting them in a better financial position, whatever the case may be, we can then justify closing a loan in the DTI in the 70s, because we believe that it's the best thing for the veteran. Now, are we going to close, a loan in the 70% DTI range where there are no reserves and they just barely scraping by the skin of their teeth? We'll probably look a little tighter at those ones, and those ones may not fly through. But so long as it makes sense for the veteran and for the borrower, that's who we're here to serve. We want to, provide, home ownership ability to all of our borrowers.
Go ahead, Dave.
So Kelly, I got a question, or a comment, I guess. One of them is communicate directly with underwriter and the closer. We were talking about common sense underwriting. That is a big thing, to actually have the loan officer explain to the underwriter exactly what is going on. If granted, everything is done by email or, that type of thing, sometimes that doesn't quite get it across what maybe an urgency is, or an extenuating circumstance. Is kind of hard maybe for a loan officer to explain in writing, but he can do it verbally. That makes a big difference, and it speeds up the process. That, as you mentioned, that you can speak directly to an underwriter. A lot of other places, everything is so automated, you never ever speak to anybody, and so you kind of wonder, well, what's their temperature? What's going on? What's going on with my loan? When you hear somebody's voice, you actually can get a feel for they understand what you're trying to tell them. Whereas when you just send an email, sometimes you kind of wonder and are guessing, do they understand? Do they like what they see? That type of thing. You can hear that in a voice. And I'm an old-fashioned guy, like I said. So, when I see text, you can't really read emotion or anything in a text. But when you speak to somebody, you can feel that. So that's great that Freedom has it open. And that's a major commitment too, to have an underwriter take time away from getting his or her head out of a loan file and actually talking to you about it. That's a commitment for service to the loan officer, to really try to help them get their loan done.
And I should mention on that point, which I agree, I feel like it's so important. What we do is every transaction is so unique. But I should mention also that we also have built a Hawaii team. I would say over 90% of my files go to the same Hawaii team. So for FHA and VA, our underwriter is Deb Wyman. You're going to see her almost on every single one of your files. She knows and understands Hawaii. She's also one of our best underwriters in the company. Our closer, we have Jeff Ritz. Our junior underwriter is Amy Austin, now Amy Hensley, who's been here forever. And our, we call her our customer advocate. She would be, everybody calls them a different name, but kind of like my assistant, right? Her name is Jillian. Jillian and Amy are on island. Amy's in Eva, Jillian's in Hawaii Kai. The closer and the underwriter are on mainland, but we have the same team that are going to work your files. We want those personal relationships. We want to get to know you. We understand Hawaii, and it helps make the transaction more efficient and more enjoyable that way.
That is so awesome. Having a localized, dedicated team is so very valuable. Absolutely. So another question that I would have that, and we've seen a lot of this come across is, and it sounds like because you guys are so flexible, border income. So when we've got a veteran that knows that his buddy's going to be moving in with him, how does Freedom treat border income? How do we look at that, and how can it work in an advantage to the broker in getting that loan?
Border can be kind of tricky. Generally speaking, you're going to need a 2-year history of receiving border income and be able to document that. If you have that, VA has a quirky guideline. VA has several quirky guidelines, as we all know. But VA has a quirky guideline that if we have acceptable border income that we can accept, meaning there has been a 2-year history, that the border may not occupy more than 25% of the gross living area of the property they're going to be living in. So what they're saying is they don't want the veteran, living back in a back room with a hot plate, and then the border has the kitchen and the main bath, and so long as it's somebody who's renting a room and then sharing the common space, which is going to be 9 times out of 10 the case. But it's a quirky guideline. I've had it where it's we have kind of like an unpermitted ohana where it's separate, but the ohana is bigger than the main living space. And that was only one time in all the years, but we weren't able to use the border income in that case because the border was living in more of the gross living area than the veteran. But that's for border. Now, if you're looking at units, if if it's truly a 2 to 4 unit, then we can actually use rental income, which that helps significantly. So it's only when it's usually when you have those, unzoned, unpermitted Ohana type units where that comes into play.
Okay, so if I'm hearing you correctly, the usage of border income would be more viable on a refinance, right?
Yeah.
Because they have to show that history rather than a purchase where they're trying to use that income in order to qualify for more house per se.
Correct.
Okay, and then just as any other traditional type of a program, you would demonstrate that border income through Schedule E tax return, or would you take
Ideally, I have in the past accepted bank statements and or canceled checks from the border or bank statements from the veteran or whoever the homeowner is going to be, showing that regular income. So we don't necessarily, there's not only one answer for that. So there are ways to demonstrate that so long as it can be documented.
Awesome. Awesome. Thank you. That is such great intel. Thank you so much, Kelly.
My pleasure.
Do we have any more questions from the attendees at all?
At this time, we do not have any questions coming in from the attendees, but the chat is definitely open. Question box is definitely open. So let's go ahead and have you guys put those questions in for Kelly. And then while we're waiting for those questions to come in, let's talk a little bit about HAMBY and some of our upcoming events. So once again, thank you everyone for being here today with Hawaii Association of Mortgage Brokers. And as Dave had mentioned in the beginning of the presentation, we've got a bunch of cool stuff coming up over the next few months in order to really reach out into that community, starting with this Saturday at the Hawaii Food Bank. We've still got spots available, so please sign up. Let's give back to the community. Dave, tell us a little bit about the Hawaii Food Bank and what's going on Saturday.
Saturday, we will be meeting over in the Mapunapuna area where the Hawaii Food Bank is, next to, I think it's next to that Goodwill. You can't park in the Goodwill parking lot, but I've done this before. It is a great event. It's an opportunity to give back to the community. We're basically going to be unloading boxes off pallets and then taking canned goods out of boxes, putting them on a conveyor on a table. Others will be getting those canned goods and putting them in a box, and then it'll go down a conveyor belt, and then it'll continue to get filled until it's stored in their warehouse. And then another group later on in the week will go and deliver those to the kapuna. So it's a great thing. You get to meet people from all different walks of life. Different groups are there also volunteering. We're just part of that group, of a large group that the Hawaii Food Bank needs. We're going to have our HAMBY t-shirts to give out over there. And who knows, you could be sitting next to somebody that says, hey, what's HAMBY? And you can tell them, hey, we're the Hawaii Association of Mortgage Brokers and Professionals. Well, what do you do? Well, I would always say, I sell money. But you could say, I'm a mortgage loan officer. And somebody might ask you, well, what's the mortgages like right now? And you start having a conversation with them, and they might say, hey, can I get your card? Who knows? You might pick up some business by doing some service project, and that's all great. So it allows you to, number one, give up your time. Everybody in our industry makes a lot of money. So giving money is nothing. Giving money is nothing. Where it really counts is when you give your time. Time is something that only you have, and you can't get it back. You can always earn more money, but you can't make more time. So when you give up your time, you're giving selfless service. You're actually being selfless of yourself. So that's what we hope that you'll see when you go out. This is not the only service project we'll have. We'll have others during the year, but we hope that you'll participate in that. That's coming up this coming Saturday from basically the work will start from 8 to 12. Most of the time we finish early. we'll have Dave and Buster's coming up in on April 6th. We'll see the lucky leprechaun there again. And I'm sure she's going to have a couple more war stories. But I hope that you remember what Kelly said about some of those tough situations. Maybe you've had one. Maybe you have a client that mentioned their situation to you, scenario to you, and you said, "Oh, I can't do that one," and they just went someplace else. You better call them up because maybe Kelly would be your lucky charm. Okay, so don't forget about those kind of things. But Kelly will be there. We'll have some other of our platinum sponsors and gold sponsors that'll be there in their presentation as well. Let's see. I was just going to say, we hope that you guys will take advantage of all of this. All these things are here to help you. We'll give you a little update on legislature. Legislatures is right around the corner. Between I think the 14th of April to the 20th of April is NAM's national organization where they're going to be doing some lobbying with our federal, state governmental representatives, with our Senate and House representatives. And so there are some things that we would like them to know from NAM. NAM will give us somewhat of the concerns that they have for our industry that we want to project to our state representatives, to our Brian Schatz, to our Ed Case, to our Macy Hirono, and what's the newest one? I can't remember her name. But those things, we want them to hear from us so that they're aware that we are part of Hawaii. We're part of the industry here, a very important part of the industry. Housing is so important here in Hawaii. If we don't have any say in it and we go quiet, then all of a sudden somebody's going to dictate how they want us to run our jobs. And we need to be the creative minded ones to help people get into a home. That is so important. Recently, Judy and I and some of the other board members met with HBR. Great luncheon we had with them. They have some great ideas. There have been so many times when maybe a loan officer and a real estate agent kind of bang heads. But now we're looking at it and going, they need us, we need them. And they are very open to working with us. And so we're going to be doing some things hopefully together with the Honolulu Association of the real estate agents here. Judy just finished up last week Friday, I do believe it was, a presentation for Hamby with a lot of the real estate brokers for us. I was sick that day, so Judy picked up the pieces and went there, had a great response. So that is all going to be things that we hope will pay dividends for being members of Hamby, that you're going to have a much better connection or recognition with real estate agents, because that's what we're going to push there. Next thing, Judy and I and some other members of the board met with our state representatives in the finance and housing committees here here locally. And the next thing we're going to do is we're going to go try to see the governor about affordable housing and our little agenda, and finding out what his agenda is. How can we help him achieve his agenda from our end and from the real estate end? We all need to work together. These are kind of the things that we're doing this year. The word for this year is synergy. We want to synergize our wholesale lenders, our escrow companies, our appraisers and our government officials, and let them understand, and the realtors, and let them understand how important real estate is in the state of Hawaii and how we can make it a good, solid foundation for the state of Hawaii and for the economy here locally. So those are the kind of things that we're up and doing right now. So we hope that if you're not a member of Hamby, that you will be. If you are a member of Hamby, you go get somebody in your office to join. Come out and see what's going on. Come out to this next roundtable, which is just around the corner. Get registered. We're going to have some great wholesale reps that'll be out there to solve your problems. You got a loan that you can't figure out how to do, you got to bring it to that roundtable. Listen to their presentations, their war stories, and that war story might say, "Hey, I just had that bullet blast right over my head, and I need to get the protection and get that loan done." I hope that you remember what Kelly said. Kelly had, look at the screen right here. There's some good things. You got a condo that, gosh, I've just got one and I'm trying to figure out who's going to do the condo docs. Well, Freedom's got very competitive rates. I'm going to call Kelly up. This is what I've got. There you go. Makes it easy,
Yes.
right? Easier. I don't say easy, but easier for you to try to get your loan done and help your client get into what they all want, get into that house. So grateful for all of you attending here. Grateful for Kelly to take the time to share her information and wealth of knowledge about Freedom with us so that she can help you and you can help your client. Judy, do you have anything to say?
Yeah, so I think you said it great. So just as a reminder for everyone, April 6th over at Dave & Buster's at 5 p.m. We're having the roundtable with the lenders where you will see the Leprechaun, Kelly Dunbar live and in action. And then just as kind of to round out your talk today, Kelly, I see on the bottom of your screen, check out our conventional pricing too. And we didn't talk about conventional because we were focused on government, but tell us a little bit about some of the special things that you're doing in the conventional world.
You know, realistically, we pulled out of conventional for quite some time to clean it up and streamline it. What we were finding is we were getting a lot of extra conditions, underwriters putting kind of their prerogative on it. And when we pulled out and cleaned it up, we are now just following findings. It's simple, direct, straightforward, no surprises. I mean, you know, obviously if there's a pay stub that has something funky, we're gonna dive into it. But the process is cleaner. We've gone, and because we've cleaned it up, we've streamlined it, we've made it more efficient, we've gone back into pricing. So now that it is an easier, cleaner, faster process, so now we have pricing to match it. So we will. Historically, we've kind of come in and out of conventional pricing. We're pretty consistent with government, but we're back in conventional for that reason. And I've had nothing but really good experiences in the last several months. So it's been, we eased it back in, we did it right.
Awesome. And then some of those perks that we just talked about, the condo docs, all of that extends to your conventional products as well?
Absolutely. Absolutely.
Awesome.
Yes.
That is such great news. So across the board, you've got it handled at Freedom.
That's right.
That's right. That's right. Well, we are almost out of time today, you guys. We've got about 2 minutes left. We definitely want to thank Kelly for being here today, making it so much fun for all of us because, you know, mortgages, it's hard to make mortgage fun and finance fun, and you have found a way to do it, Kelly. So thank you so much. And Jay, you enjoy that beer. It's going to taste extra great since it's coming from Freedom today. Any last words you want to keep, share with our team and share with the Hamby members, Kelly?
I just want to say thank you to Hamby for putting this on and for all that you do to support our business and the community. You know, these are tireless hours that you guys are putting in on your own, and they're very appreciated. So thank you so much, everyone on the Hamby team and the Hamby board, for all that you do. Thank you.
Awesome. Well, thank you so much, Kelly. And of course, Jay, you're going to have to attend the lenders roundtable now. Otherwise, how are you going to get that beer and all of your amazing gifts? And of course, Rebecca, thank you for your question, and we'll be looking forward to seeing you at the lenders roundtable as well. So remember, everyone, reach out to Hamby. Let's volunteer. There's some great committees for you to join as well. You can do boots on the ground, seminars, help us put on the next roundtable. Be a part of us. We are strongest when we've got our members to help us give this great industry a wonderful lift. So thank you to everyone. Thank you, Dave, for being here today. Thank you, Kelly, for your amazing presentation. And we'll be sending out the attendee list to her, so look out for her emails and reach out to her directly with any questions you have regarding Freedom Mortgage, VA, FHA, and of course, conventional and those free condo docs. Let's go.
Thanks, guys.
Thank you, everybody.
Bye, everybody.
Have a great week. Aloha.
St. Patty's Day. Bye-bye.